Good evening, savvy savers and curious investors. Welcome to Capital Market Live on Channels Television. I am Will Ebong. Let's check out how markets performed this week globally and in domestic markets. What's important is how that impacts your bottom line. First up, Europe. European markets plummeted. We've seen stocks extending losses on Friday amid a global downturn as weak U.S. economic data sparked fears of a recession. The regional stocks 600 index closed lower, its worst day since December 2022. All major bosses and almost all sectors were in the red, with tech stocks closing nearly 6% lower. Let's check in on Asia. Japan's benchmark index is nosedived on Friday, with most Asia-Pacific markets lower after a sell-off on Wall Street overnight on recession worries. That's quite worrying. Now, the Nikkei 225 tumbled 5.81% to end at 35,909 points, marking its worst day since March 2020 and dropping below 36,000 mark for the first time since January. The broader topic saw a larger loss of 6.14%, marking its worst day in 8 years and closing at 2,537 points. Now, the largest loser on the Nikkei was Daiwa Securities, which saw an 18.85% wipeout of its market cap. Let's check in on the U.S. stocks now, which fell sharply on Friday as a much weaker than expected jobs report for July ignited worries that the economy could be falling into a recession. And the broad market index dropped 1.84% to end at 5,346 points. Now, the Nasdaq Composite lost 2.43% to close at 16,776 points, bringing the decline for the tech-heavy index from its recent all-time high to more than 10%. Due to sharp sell-offs in heavyweight tech stocks like Nvidia, Moderna, and Intel. Intel reported a big earnings miss. Now, the Dow Jones Industrial Average fell 610 points, or if you can say 1.51% to finish at 39,737 points at its lowest, the session low. The 30 stock index was down 989 points. Now, back home, let's look at the domestic equities markets. Continued with bearish sentiments as profit-taking activities on MTN Nigeria and Nestle drove the all-share index lower by 0.46% to 97,745 points. Year-to-date returns settled at 30.7%, still in positive territory. But looking at the activity chart, we see the total volume traded declined by 4.3%, while the total traded value increased by 11.3% week on week. Across the sectors, the consumer goods, the banking, industrial indexes posted losses, while the oil and gas and insurance indexes recorded gains. Alti Briscoe, let's look at that stock, topped the gainers chart for the week, while UCAP, United Capital, led the losers. Profit-taking, I guess. Now, the trio of Fidelity Bank, UBA, and Zenith Bank top trades by volume. Now, look at some news before we dive into the equities market. The chairman of FBN Holdings and strongman of the financial and capital markets, Mr. Femi Otedola, has backed the federal government's plans to implement a windfall tax on banks, emphasizing its importance in creating a more equitable economic environment. A statement released by the billionaire businessman and chairman of Kirigu Power PLC condemned bank chiefs over their extravagant spending on private jets and highlighted the need for reforms in the banking sector to enhance its stability and integrity. The windfall tax, which was initially proposed by President Bola Tinubu at 50% on bank profits on FX gains, was increased to 70% by the Senate and passed into law and will take effect from 2023 to 2025. Now, to help unpack and dissect these happenings and the numbers is Ambrose Omodion, Chief Research Officer, Invest Data Consultant. Ambrose, good to have you on the program. It's always good to have you. First off, let's kick off with this. Mr. Femi Otedola is a chairman of FBN Holdings. Why do you think he is backing the federal government right now? We see his reasons, but what do you think? He should be on the side of the banks, don't you think?
When it comes to capital market, because it's a capitalist environment, we have different perception to issues. On its own, that is what he's thinking. But for us analysts in the market, we see that these have sent a kind of a misreaction or signal to the market, especially at this point that the CBN have said banks will capitalize. That sentiment is showing already on the banking stocks. Yes, it's good that SBMB or FBMB is also preparing to come for primary market activity. Unless they are the major shareholders, the big boys in the bank will take off the right issue, or they were coming for a public offer. But as we speak now, yes, the banking sector is one of the most important for me engine of any economy. But overregulation at times can also dampen the confidence of the investors in that sector. For me, government also to think twice. Yes, 50% to 70%, in between change of 20%, it's not send a signal to the public. Also, these are private-run business. These are not government business. Yes, the way they run their business should also concern government, because if these banks are posted loss, what would the bank, what the government be doing? I remember, about 4 years ago or 5 years ago, or during that time of having an issue of bank having a negative shareholders fund. Federal government came in, the National Dollars Bank, because they injected their own fund into the banks. Now that the banks are having excess, they want to take it from the bank. Are they going to propose? Me, I want to balance, the reason behind this, because when there were negative shareholders, you invested money into this bank. That bank was nationalized. Shareholders, went out without getting anything from that business. Now that they are not running the bank again, this is a shareholders fund again. We're not going to tax what they have gained. When their shareholders fund was negative, you came in as government, you injected fund, you took the bank away from the shareholders. Now the shareholders have run that bank very well. Now they have good retained earnings, they have a gain of FS. We're not going to tax the gain. For me, overregulation is becoming, let's think that these banks will survive. Because if they survive, the economy survive. Because anywhere in the world, the banks in the European economy.
But you see the businessman Tedola supporting back in the federal government here. So why what's his reason? We hear him, but what's the underlying reason here? Is it just because of the jet, the private jets and whatnot?
No, actually, anywhere in the world, as example, you have to, as a leader, you have to set an example. Yes, if they are making profit, shareholders are not, because they are paying them good dividend. Yeah, whether also those banks, if they are shareholders, let me tell you, for example, where Tedola is also a shareholder or not the chairman, and invested money and they paid him dividend because of hard future money, he can go and buy jet from his own dividend. That is your own earnings. This man you are pointing that they are earning jet. Do you know they are holding in their banks? When they pay dividend, it comes to them. I know what is holding in the bank today. If by God grace or C First Bank coming to pay 2 naira per share because they are paying 50 kobo, 30 kobo, it might not feel in part of their dividend right now. But others are paying 4 naira, 10 naira dividend. With your holding, you have good money to as dividend. That's why for me, I have to go back and say, let's look at all he has said. Fine, it might make reason to him and others, but for me, it's because your bank where you are running today is paying kobo as dividend. You might not feel in part of that dividend on your holding. But those that are also holding good chunk of the bank shares, if they pay 4 naira, 2 naira, it also reflects on their, because they've invested in that company. That is why it's an investment. The return, you can return to buy bicycle, can you return to buy jet, it depends on you.
So you see this windfall tax or this proposed tax impacting on banks' ability or the capacity of banks to pay good dividend in the near future.
Exactly. At the same time also, now that they are raising funds, going to capitalize, to run that 1 trillion economy that the government is envisaging. This was sent because the government wanted them to bring all the money that are hiding in every kitchen. That's why I say, don't use your retained earnings as part of your capitalization. So you can go out to the public and bring back money that are flowing that the bank cannot, the government cannot control, CBN cannot control. Instead of going back to what the public, let them encourage them to come and invest, showcase your fundamentals, showcase your prospect, where we are going to these people to invest in. For me, I believe that it's just between, your thoughts, my thoughts, my perception, your perception. For me, it's just because on his side, you might say that, where he's standing as chairman, the man will be paying good dividend as expected. Like I said earlier, if he has, for example, I have 15% of First Bank today, they pay 4 naira dividend. That's a good money for him. But for those that are able to pay that, if from their profit they are earning money, you can buy bicycle, you can buy you can buy jet, depend on you. It's your own investment. For me, how you spend my own return? Because this return on investment, you don't ask me how I spend my return on investment. That is it.
So it's all about perspective, exactly. Relative perspective. Yeah. So now let's look at something that really happened this week that shook the country. We saw the country witnessed a nationwide hardship protest, which started on August the 1st, that's Thursday, and we just want to know what impact did this have on the market. We did see some impact in some of the real. Could you share your own opinion? I'm sure you were following the market, you were following Drive. The market, especially NGX, did have to go on to trade remotely, because they couldn't open physically for business. But how much impact did this have on the overall trade?
No, we are not surprised that we are seeing this protest going on today. If you go back and look at the economic data, I show you that Nigerian economy is contracting already. And before people start, coming out to shout, they see where we are going. if something is not done or no strategy is not changed by the government or the economic managers. For example, now we saw our first quarter GDP already declined from the last quarter of 2024 GDP. Now, if you look at the last 2 months, now the month of June and month of July, the Purchasing Managers Index, it has seen a signal that the economy is also contracting. That means business activities is also declining. Private sector is also because of what? A major one thing, interest rate is high, inflation is high. Automatically, we are killing business in Nigeria, and people that are being employed, if their employers cannot borrow money to run business, it closes down the business. These people are going to stay hunger, to go hungry, and also being to sack us downside. So for me, they're already seeing where the economy is going. That's why they're coming out. But it's not done on economic managers and the government to rethink the strategy. Yes, they might have good policy in the paper. The implementation might be another thing again. You can go back and kind of, go to round table again, look at your policies, your strategies, and come back and say, Nigerians, this is where we're going, this is where we're missing. Okay, we can do it this way again. Then that confidence will be, before me, I believe that it's about confidence, because already the data are pointing where we are going. Which, they tell you that either when they came in, FS was, 32 billion, now it's 37 billion. What is the exchange rate as at when it was 32 and today? All those we are not telling to people that don't understand simple mathematics. I believe that it is time for the economic managers to sit down and work with the president. Let them think Nigeria economy to do, because as I speak now, we are not in the progress part, as we speak. That part of prosperity, I have not seen it in the economic policies of this government. We need to go back and put that so that we can move forward. I believe that, yes, the government, the president and his team must have good things in their mind, but we need activities or plans that will bring out those things they have in mind. And they will say, yes, we'll have people that are leading us. I believe that with what is happening now, everybody in government, both at the state level, local government, federal government, should sit down and say, what can we do to make Nigerians happy? Why? Well, let the economy start finding its way toward a path of progress. That when you start seeing it, people start coming down. Because like today now, I heard that on the TV that for those that are the federal government staff or civil servant, they are buying rice for 40 naira. What are those that are not working 40,000 naira? What are those that are not working under government? They now buy at 80 naira. 80,000.
I'm sure you're believing that it's going to go to 40 and 80 naira very soon. I'll hold on to that dream, very far away dream that is. But let's just speaking of high interest rates. We did see that Bloomberg report coming in about our sovereign risk bonds surging to an 8-month high, and that the dollar bonds were one of the worst performing in the emerging markets. So all these protests, the impact of the protests still, seeing that impact because of high interest rates, and we see premium for sovereign risk bond jumping up. So is this what we're going to be seeing going forward, since now that there's kind of like an uncertainty around government policy, around the reforms they have for the economy?
Now, when it comes to sovereign that downgrade, don't forget that about 2 weeks ago, a week ago, the IMF also downgraded our economic growth, that yes, from either 3.4 to 3.1 again. It tells that they have seen that things are changing, that government policy look good, but implementation, they are not seeing where we are going. We have stayed like in a circle moving around about, we have not seen a headway, either to move forward or we are going backward, but we're in the same place standing and we are talking. That is why it downgraded the economy from 3.4 to around 3.1 now. For me, it's a sign. What you are seeing from the Europe bond, for me, I'm not surprised, because the risk associated with the economy, also you have to pay premium on that. That is why you are seeing that the Euro bond return or what is called premium is high, because you know that this environment that has what high risk.
It's really very volatile this period, and we need to really be very strategic in terms of how we plan. But how do you see corporates dealing with these issues right now, especially with high interest rates? How do you see, what's your solution or your proposal, recommended proposal for them, or resolution to this problem? For
me, I've seen that some of the quoted companies have really shown no competent in terms of money. That's why it's true that the numbers that were seen that have been released and what the government is doing, you said it's not the same environment. If quoted companies can bring out such results from this booming economy, say that the managers are really doing proper job. That means why we need this thing to be repeated at Nigeria level. Let Nigeria let our president become our CEO for Nigeria economy, and let's say, because if those are managing listed companies are taking out good results, some results that came from different sectors, how they are looking, only few of them I can say that yes, they are missed or negative, but I can say in the environment where things are like this, results are coming like that, means we have to give kudos to our manager. But one thing is that they to not forget that on the long run, the economy starts reflecting on the market. It's about a little while that market can disconnect from the economy, as we speak, but in the long run, it was reflected. That's why before it becomes something that both the market is going down, the economy is going down, let the government fix the economy.
We'll take a breather. When we come back, Capital Market continues. To stay with us. Welcome back. If you're just joining us, you're watching Capital Market Live from Channels Television. We'll be discussing the impact of the protest, nationwide protests on the markets. We'll be discussing the economy, and we'll also be talking bank earnings. But Ambrose Omodion, Chief Research Officer, is still with us in the studio, Invest Data Consulting, and is going to continue and give us the breakdown as to what the earnings results means for the market, what it means for investors, and how they can profit from this. Ambrose, it's still good to have you in the studio. Let's look at the earnings results. Surprisingly, we saw some good results from some companies, especially the oil and gas sector. Seplat, we saw that from Seplat. But before we go to Seplat, let's talk about the oil, the manufacturing sector. We saw Presco and Okomo doing so well, especially for their earnings per share jumping so high there.
No, actually, no, in any market, no price feed on earnings, either in the short run or in the long run. And also whether the market is bullish or bearish, when numbers come to the market, it has a way of sending a signal, because dividend payout is a function of what are you making as earnings. That is why you don't give what you don't have. When a company is posting a negative number, let's expect that company to pay you dividend. But now the market has seen that the numbers from Q1, Q2 are sustaining an uptrend in this sector, especially the oil sector, the agricultural sector, and other service sectors like insurance, bank. We saw some few brand results. These are looking good. But for the agricultural sector, the one that came from livestock, Okomu, Presco, have sent a signal for that industry. Even the one that came from FTN Cocoa, we saw that these numbers are looking up. So that there's something working. That is why the government need to do more policy to boost that sector. But this high interest we are seeing, like a bonus for them. But despite the grooming economy, we are seeing companies that sector doing well. Tell that if the economy is really conducive for them, we'll see more. That means food will come out. So that despite that things are hard, now you can see the number are coming from. That means if the environment is looking good, we can see more. This company can expand to employ more. But insecurity is still hitting them. But despite the insecurity in that sector, because I think most of the farmers are out of farm. But these ones, because they know how to manage it, they are still positive. For me, I believe that we need more policy that will encourage them. But for investors, this type of called sector rotation. If the market is going down, we saw what happened in the month of July. The market saw almost losing about 2.28% for the month of July. But despite that, there are some sectors that also said the future at the gainer start because of the performance of those sectors. I believe that now investors should look at these numbers that are coming, because this is what price feed on and start building their portfolio to where there is opportunity. Those sectors that I see, for example, you see how FS have kind of man performance in what like the consumer goods sector. Also that came from Almighty Nestle, how he posted a negative number. Dangote Sugar, we saw them Guinness, Nigeria Brewery, negative number. I said that something is hitting them. That's why I'm surprised that government is going one side to tax. It's the same policy of government have thrown some sector of the economy in that because of their policy. Why are they now trying to go to that? So fine, it's possible that he has to balance it, but it is a way it comes that let's see reason that this sector how can we do to encourage them more? This sector also in the market to raise money. But this sector that are now suffering, what the government done to cushion the effect of those emerging sector? That's why policy need to be visited and find a way of encouraging those sectors, because that is a sector that employ more Nigerians. Because industries, is where people work, and that has fashion. But if cost of running is high, you can see the numbers already showing that they are really in a bad situation. That's why I say investors should not say because they are bad situation, they invest again. Move your fund from those sectors that are doing bad now to where they see opportunity where you can make money. That's how to invest. That's why sector rotation, probably balancing will continue at any given time, so that at the end of the day, you smile back to your bank. But not just because you are the economy. That's why the economy is booming. It's a sector that will give you money. Whether there's no economic downturn, so that will give you money. As an investor, don't be fooling your hand and be crying that, the interest rate is high. Which people are putting that high interest rate? The banking sector, the insurance sector. Go to that sector, because policy direction will guide you where to put your money as an investor.
Policy direction is definitely guiding, but we want to know if policy direction is the one guiding livestock. We're seeing their earnings per share jumping. They released their results for the half year, and we're seeing their earnings per share jumping from about 1 kobo to 14, let's say 15 kobo. How did that magic work? Is it the livestock ministry?
No. I've said it earlier that it's not the livestock ministry. I've said it that for the past 2 years, we have seen livestock feed coming back. This is a company that posted almost loss for the past 5 years before now, before the 2 years I just said. No dividend. If you add that 5 years for this one, almost like 8 years, 7 years, they've not paid dividend. In the last 2 years, they're trying to stabilize before they start paying. Yes, I see them posting 1 kobo positive from a negative. But now I see that 1 kobo positive, positive in 2023 has turned toward 15 kobo in 2024. That is a big jump. It sends a signal where the company is going. For investors, what are you going to do? look at where it's opportunity. And for almost 8 years, I said they don't pay dividend. If at the end of the year, like I said in one of the programs, they posted 30 kobo for the whole year, they can pay you 10 kobo, and that they think they are 20 kobo to expand the business. That's a signal that they are back to business. Okomo have been consistent in dividend payment on both interim and full year. First, have been consistent in dividend. If like we join that group again, for me, it's a good thing for the industry.
Let's just check out the oil and gas space now. So much in terms of the earnings jump there. You're laughing, Rose. It's really, really huge here. We see Seplat having a 107% jump in revenue. And we also see that for Total Energies, a 93% jump. And we also see NACO. Okay, NACO is not even in that space.
Yeah.
But we see O&O. Well, when we look at O&O's transparency, one of the results coming out are not bad either. But what's really happening with the oil and gas sector, especially with what is going on with Dangote refinery, with the oil sector and the NNPC Limited looking to, get more oil-backed loans. What's really happening and what's driving this sector, sentiment in the sector?
In the economy, we are looking into electric vehicle and other stuff. But in third world country and also most factories in the world, they still don't know on crude to run their business, to run their factory, until they're able to get electric that will run their factory. For now, that means that business is still stable. For crude to remain above $80, I say that yes, even though there is war in Middle East, there's still demand for that. Fear of China economy data not to as biggest demand or purchase of crude oil. What's the US economy data that also that is missing. But still,
not forgetting the tension in the Middle East.
But oil still remains stable above $80. It tells a signal. For me, seeing the life of what's it called? Seplat in crude oil business, posting such number, I'm not surprised. For Total, Total is into marketing, locally. Total International, Total is not into, Nigeria is not into crude business. But the one in Nigeria is one that going to marketing of filling station and also solar, selling their solar thing. But still, consider what is coming from that sector. Even number that came from, internal was not positive, but because the positive sentiment for the sector, it had moved internal from 16 naira to almost 19 naira. But the life of Seplat, because of the coup and also they're expanding, they're acquiring other assets in Seplat. Then the same thing is the trend we're seeing in Owando. Owando just released their unaudited account for 2023 and 2022. Since then, market perception have changed because they've seen a signal. Only that Owando needs to be more transparent to boost investor confidence to sustain this value we're seeing. Also, as all eyes are seen in Owando, unaudited account for 2023 in this month of August, because they put in the market, they're giving already timetable in this August. And while their Q2 and Q1 will be coming in September, if you come and see a trend, also if you look at other companies that are also the same crude oil, what Dubai saw in Arada, so there's a jump in their performance. We expect that Owando should repeat that. If Owando fail to do that, I'll tell you, market put Owando where it belongs, because Owando have not been transparent, but if they turn to be transparent going forward, there's a lot of value in Owando. It's not that into crude oil business, acquiring Ajib, expanding them, but only that when they acquire ConocoPhillips, we didn't see impact on them because it took for 8 years they've not paid dividend. Now that they are coming with acquisition, we expect that this time they should know that the market is watching them, because if you fail to become transparent and build confidence, you will remain where you are. You can see the price of Seplat 3,730 naira in the market. It's already moved from 500 to where, because investors see confidence. Consistent dividend, it drives the price to that level. We saw also Arada in the OTC market selling about almost 5,000 naira. And also, while Total is selling about 424 naira to speak now, 437 naira, while Owando is still below 30 naira. Why Owando has, that is why, if it's an investor that sees yes, if Owando can become transparent, that is why they put their money. I believe that there's potential in Owando, but we need them to become more transparent to boost investor confidence. But I believe that sector, because they are into good business, there's a lot of money to make in that industry. A
lot of corporate governance issues, and they were to sort in that thing, and then we begin to see them begin to move up.
Exactly.
Their investors will definitely
it creates value for even the major shareholder and the minor shareholder, because when your share move from as low as 9 naira to the 25, you have potential to make 100 naira. But what I have sold before now, sold around the 250 naira before coming down to where it is because of bad governance, bad attitude, everything. But now that our result is improving, that is what really changed the signal in Owando. When they saw the 2022 audited account and 2023 unaudited, whoa, this complete one is gone, because in the market today, as to speak, all the general NGX, the highest result that come from the market, the market is from Owando. Owando is the only company that posted 3.4 trillion as gross earning in the market. No company in Nigeria posted that. Even the ones that are doing well, Seplat of them. It is a signal. But at the end of the day, what is the bottom line? They will start about 74 billion as posted that. If by 2024 we see what we're posting 300 billion but PAT, market will be wow, this is a number, because if you're having 3.4 4 trillion. Let it go down to go. That means one of them have to become more prudent in managing their
their cost of sales and their cost of doing business.
Investor will not have confidence. Okay. Even the managers will be happy that yes, we are back to the limelight. That's what they need to do.
Before we go, Ambrose, let's quickly look at the gainers, the performance for the equities markets in the month of July. We've just finished. We'll cross that and we're in August. But before we look at August, the outlook for that, we need to see how the equities market performed in July. Let's look at the top stocks there. We see, we can have that quickly. We have O&O. Corn oil. We're still speaking about the oil and gas sector. We see O&O and corn oil top on that list there, Ambrose. And livestock following, not so far behind. And then when we look at the top 3 losers, we see Consolidated Hallmark PLC and CWG, Omatech, Thomas Wyatt, UPDC Credit. So look at these stocks. Can you talk about the performance in just, let's say, 1 minute?
No,
very quickly.
No,
wrap up this.
For me, it's just the earnings that just change the perception of the market. That's for one. Why for corn oil? The corn oil have paid dividend of 3 naira against the 254 means and also improvement. Why for livestock? The numbers that also speaking already is also impacting it. But for the other side, the losers, it's all profit taking on corn oil. Corn oil have moved from as low as 71 kobo to almost 180 kobo. 180 kobo for me is all profit taking. But what is very clear that fundamental is changing in terms of what? In terms of market sentiment. We saw this fundamental changing from the month of July when the market closed red. But with the earnings are coming today now, I see that another trend is also coming gradually because of what? Because of the positive earnings.
Thank you, Ambrose. That's where we can leave it for today. No, time is never on our side here, but thank you so much, Ambrose Omodio, Chief Research Officer, Invest Data Consulting, for sharing your insights on capital markets. We'll have you again to share more insights and give us your perspective some other time. Thank you so much. Yeah. And that's a wrap on this edition of Capital Markets. Remember, whether the markets are bullish or bearish, knowledge is your best investment. Keep watching, keep learning, and keep growing your financial savvy. You can catch this again on our YouTube channel. I'm Will Ibong. Thanks for watching. See you next week.